Yo, what up, y'all? This is Justin, and this is the first video I want to make, just letting y'all know what's going on with Bitcoin for the rest of the year based on my analysis. I use nothing but technical analysis when I trade. A technical analysis is based on what data is doing, and I trade raw price action. Okay, so raw price action basically is about what is going on currently. With the price. I don't look at news. I don't look at hype. I follow nothing but raw price action to let you know what's going on. Okay. And let's go to the highest time frame right now. And I'm gonna speak slow. Okay. So let's go back to the basics. We all know that candlesticks form from left to right. Okay. These are the candlesticks. You know, in layman's terms, a candlestick is nothing but a digital footprint of where the price was moving back and forth put for a particular time and with a particular value. Okay, from left to right. So if I grab a crosshair, say for instance, this candlestick for the monthly time frame, also we're looking at June 1st in 2023. This is the value of what this candlestick was. It went from here to here. With this price, if you look to the right, this is the value where it went for that time. And if you go to the right next candlesticks, this shows what's going on July 1st, August 1st, so on and so on. Okay? We're just going back to the basics so we can understand how candlesticks work. And when you use your crosshair, it'll let you know what the value was of the candlestick in the time. All right? So from left to right, all right? Let's get rid of the crosshair. Okay? I say that to say this. I trade with a technical analysis using an indicator. I use the moving average crossover strategy, okay? When you have moving averages cross over each other, it creates a pattern, a visual that you can follow, and it's easy to backtest this visual. So say for instance, we see this blue moving average right here, what I'm looking at, crossed over this orange moving average right here, okay? When it crossed over and uh, certain requirements were met, the moving average kept going. It stayed over the orange and the price was going up. So what was going on? The candlesticks were going up. The candlesticks kept trending up. The blue moving average was trailing the direction the candlesticks were going. But being that it was over the orange, it created a pattern so you could visually keep yourself in check to let you know to keep that trade open as long as the blue is over the orange. Keep that trade open as a buy. Okay. And every time, let's look back a little bit more. The blue moving average was under the orange moving average. The candlestick were trending down, okay, from left to right. So from left to right, all we're looking at is when the blue moving average is under the orange moving average, the price is trending down. When that blue moving average is over the orange and stays over the orange, the price is trending up, okay, from left to right, okay. And candlesticks are attached to price action. That's why it's important for me to use a moving average because I understand that the moving average is attached to the price action, okay? All right. So let me go to a smaller time frame to give you a better understanding of what I mean. So the price right now of Bitcoin is at 87,596 and 50 cents. This line right here represents the right price action. If we zoom in as we did, we look all the way to the right, this orange candlestick right here shows that it started right up in here and the price was going down. Remember I said it's a digital footprint, or if I didn't say it, candlesticks are nothing but digital footprints from left to right, letting you know how a particular candlestick was, how the price is moving. up and down where it started and where it ended. So you see how every time price action go up, the candlesticks is responding to it. Moving averages trail the trend. That's the best way to say it. Moving averages trail the trend, okay? So if the price is trending down, the moving average is going to follow the direction that the candlesticks are going based on what the price action is doing. Okay, so again, we see on the 2 minute time frame, every 2 minutes these candlesticks form. The price was trending down. Moving averages are following that digital footprint I was telling you. Okay, and when the blue was over, orange price was trending up. We can backtest this strategy and see how it performed in the past based on the 2 minute time frame that we're on. Again, when the blue was over the orange, price was trending up. Blue under orange, price was trending down. Even if it was briefly, it's still going to respond. Moving averages respond. That's why the moving average crossover strategy is such a easier, um, it's more of a systematic approach because we could back test it and see how it did perform. And all it done was the same thing. The blue moving average was under the orange moving average. It was trailing the price. The price was always going down. And when the blue moving average was over the orange moving average, it was trailing the price. The price was going up based on that time frame. Okay, so let's go back to that monthly time frame again. Okay. Sorry, look like I'm having a little technical difficulty for some reason. Hold on. Okay. All right, there we go. We getting it together. All right, now let's look from left to right with this. On the monthly time frame, right? It takes 30 days for each candlestick to form or something like that, maybe 20 days each. This is a little different but it's supposed to be every, you know. But anyway, let's look from left to right based on the monthly time frame. That same moving average crossover is the same parameter. This blue and orange is the same as it is on the 2 minute time frame. It's just moving averages always adjust to whatever time frame. So remember, moving averages always adjust to the time frame properly based on what the price was doing based on the parameter of the moving average. So we see when the blue was over orange, remember, it's trailing the direction the price was going. So the price was always going up on the monthly. And then we still start going down a little bit. Look, the moving average start curving down a little bit. But look, the moving average still keep you in a check where you know exactly where it's trending down at a certain point where it's trending down. Like, the instant it starts trending down. So now we see right here, the blue went under the orange, right? And the price was trending down. So basically, you could trade just focusing on moving averages because the moving average don't tell you any lies. Look, the blue moving average was over the orange, the price was trending up. But look, if it kept making these patterns in the past and kept repeating itself, and this is the live market right now, right? The blue moving average right now is underneath this orange moving average by the month. It's been like that for the last 3 months. I told people 3 months ago anyway that we were going to be in a in a bearish market for Bitcoin based on the top-down analysis on a monthly time frame. So if it done that in the past, what we think is going to happen now? It's going to repeat itself. It's going to repeat itself, and we see it doing it already. We already see it doing it. Okay. Now I'm going to go to a smaller time frame. Let's go to the daily time frame. Okay. Now we do see other moving averages on this screen as well. So we know about this blue with this orange, right? But also we see a combination of this purple and this blue and this blue and this white. Each one of those are crossing over each other, creating patterns. Each moving average is at a different speed. The smaller the parameter of the moving average, the quicker it responds, and the higher the parameter, the slower it responds. But it still responds to the raw price action. Okay. So based on, remember, like I told you, each moving average will adapt to the proper time frame. That's what we see going on right now. So remember remember this pattern with the blue over the orange. When the blue is over orange, price went up, right? That's what was going on by the day. And when the blue was under the orange, price was going down. What you learn from me is how to enter these trades perfectly. How to enter perfectly. Is a strategy to enter in perfectly. But this way of trading will help you have less screen time and it'll help you maximize your profits. You know, just based on trading with moving averages, stuff like that. Even with this crossover, damn, I just messed up something. I can go back and an analysis I did. I can put it back in a minute. But we see how make this a little bigger. You see how even with this purple moving average, it's underneath this blue moving average, and it stayed under the whole time price was going down. That's just another algorithm itself. It's just remember I was saying the slower the moving average, the higher the parameter, the slower it responds. So this is obviously a higher parameter, but it's still responding to the overall price because price was going down every time the purple was underneath the blue, right? And every time the purple is over blue, price goes up. So this is also responding to, raw price data just at a slower pace. Okay. Now, most of the time when I trade, I usually don't do trend lines and support and resistance lines, but I tend to start doing it just because I know how to do it. It makes it a little bit easier for me to, you know, I try not to predict. I do more reacting, but I do have a background in doing it, so I am gonna do it because I know how to do it. So let me put this back where because you got to take this shit serious. If you know how to do stuff, take this shit serious for every trade. You can't really be lazy with it. So I mark my chart by the day, right? I know this is a trend. I know this trend is trending down, right? I know this is a bear trend, right? But it's gonna retrace. Now, what I've done, if you can't go to the highest point where price has been and you don't see like a trend, like I've done this. If I go, make sure it's still recording. Yeah, it's still recording. All right, so look, let me show you an example. Let me get a trend line. I can go to the highest point right here of this candle, the high, and try to find where it connect. See, it broke if I about right here. I'm gonna leave it right here. You see how from here to here, it right up in there is finding some type of trend. But look, up in here, it probably ended like right up in here. But look, it crossed over. It broke this right up in there. It didn't catch another high. So let me get rid of that trend line. So that means that's a obsolete. It's not even relevant anymore, right? So what you do when you see those situations happen, when you go to the highest, like as far as finding the trend line, next go to the second highest, and that's what I did. I went to the second highest, and look, I was able to still connect a lot of with the trend line. So I put it from here to here to here to here because that's where it's touching a lot, right? Right up in there, I left it on the screen. Also, I did one from here to here as well because it hit a lot as well. So, based on what I see, it's going to either go to this trend line, like it's already hit again, it's going to hit it again. But from what I'm seeing, based on moving average crossovers and stuff, look like what's going to happen. It's probably going to hit this part and it's going to come up over and hit this part. But I also put a ceiling right here, what they would call that support or resistance, one of those. But look, I was able to determine like I said, okay, if it goes up, it's gonna go up to a certain part where it's gonna hit this trend line, right? And I put this support resistance like right here. And look, we can look from right to left. Look, price went here at one time, around up in here, keep going all the way to the left. Look up in there, up in there. Price was always up in that area. So I'm assuming for the next few days, price is gonna start going up, and this is why I say it's gonna start going up before I just, you know, I understand how moving averages, the shape goes and stuff when they start making certain angles. You see how this purple moving average and this blue moving average, this purple is underneath, right? But as the purple continuously go down, it's starting to get more closer to each other. When they starting to close in like that, it's usually a sign of a reversal coming on. So I'm just gonna let my alert system tell me when to get in and out these trades. So I do have an alert system that comes on with this based on the moving average crossover. It'll let you know when to buy and when to sell. You just manually take the trades. It's better that way because sometimes when there's too much volatility or not enough volatility, your trades won't open, and that's on any automated trading system. Okay, but that's what I see going on. You know, like right even up in here, grabbing the crosshair, like this low part right here, this candlestick was that low right here, but then it went up and never went past that low. Look, then right up in here, it never went past that low. So and look up in here, so it's keep doing that. So in my opinion, the pattern look like it's gonna start going up. Also, I know when prices, when candlesticks and wicks start hitting moving averages and start like hitting each kissing, that usually mean that's a sign of reversal going to be going on as well too, in past performance. You know what I mean? So everything I'm talking about is based on past performance, based on what's happened in the past and stuff like that. If this is a little advanced for you, I apologize. This is more advanced because, you know, this is for me, but I'm still showing you an easy way to trade just based on moving averages. Also, something to determine is, like what I said, when the price is going to go up at a certain point. Like I said, it could come up to here and probably bounce back and continue to go down. We see this blue moving average and white moving average. Remember how I was just saying when moving averages, like the trend is ending, they start going towards each other. Look what's going on. Remember, this is a downtrend, right? Bearish, right? Look how this blue moving average is faster than this white moving average. Okay, I'm letting you know it is. That's why it's over the moving average. But you see how it's coming to an end, and they about to touch each other. The moving averages, just like this moving average, just like the other quicker moving average. When it start doing that, it's a high chance there's a reversal going on. So, and that's what we see going on. Remember, by the month, we see that it's a bear market. So when this blue is underneath this white moving average, it's officially a sell based on the day time frames for this actual moving average. So it's not hard, you know what I mean? Moving averages is more about just following the shape and stuff like that. You know, moving averages could be used as a volume indicator, momentum indicator, directional indicator, you know, just with moving averages. But it's easier because once you have different moving averages crossing over, it's easier just to get a overall direction and make better decisions with the trades. But I think this is pretty damn good, making sense for what reason why I'm saying what's going on with the price. So look again, I couldn't get the highest point because it already broke the, you know, that direction already broke that. So I went to the second highest. It connects here, from here, it connects here to up in there, to up in there. You see all these points where it hit. That's why it's good assumption for me to leave this line right here, right? Then I put the line up in there, hit here, 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 up in there, hit here, 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 here. Look, hit here, 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 here. So like I say, probably gonna go up in here, hit this part, trail up in there for a little bit. We see the price continuously going up. If it breaks this, it's probably gonna go up there here. But look, this line again, support and resistance line, whatever you want to call it, up in here, from right to left. Look, hit up in that point, all up in this area, we see price went up in there a lot. So I think this is a pretty good analysis. If you want to learn how to do analysis like this, reach out to me. You know what I mean? Just send me a message. Also, you can get this trading, system at TradeMo, TradeMo.co. And yeah, this is Justin. You have a great day.